Good afternoon. It is March 5th, 2026, and today we had a down day. I think it's best uh, illustrated on the 6500 tick chart. Um, and I would classify this as a broad bear channel. Um, let's see. Let's look at like the size of these pullbacks. So if you look at this bear move here, the pullback is really not that big. So yeah, pullback only makes it to 50% there. Um, but the swings are above the EMA, so that's something you want to consider. And if you look at this move, this pullback is larger than 50%. So I think it's fair to say for several reasons that it's a broad bear channel. Uh, so anyway, let's take a look. One thing to note, if you look at the daily chart, prices opened up here. So with the past 3 days having a lot of overlap, I think it's wise to look to go short at the beginning of the day today, just as tomorrow, if we get an early sell-off, it might be wise to look to go long, look for a reversal. So that's something that you want to look for, and that's a very helpful thing to think about when you're looking at the daily chart and as it relates to the intraday chart. So anyway, 6500 tick chart. Where do we come in this morning? We come in down here. So I like buying here on limit orders, but like I said, you do want to look for an opportunity to get short, especially if, let me just, we got 6,900. So I was looking to go down to 68.10. So when this is a week, when it starts to weaken, I think, it's reasonable to start buying with limit orders, but you do want to look to sell. So when we do get this second leg back, you could argue for this one. It might be a little, yeah, you would have this trend line drawn. So yeah, that's a good move. That's definitely a good move. I think you could enter this on a limit order here. And when it breaks through strongly, unfortunately, it doesn't go straight down to 60. Oh, wait, it pretty much does. Yeah. So I was looking for 68.10 because that would make the daily move 90 points. And that's been about the average range for the past several days. So you look here, that's 6,900. So I was looking for 68.10, and you pretty much 68.15 is close enough. And so when you get in on this move, if you're not trailing each bar, which you probably should, you get a big move there. But if you were just waiting for each bar to print, you shouldn't trail this bar. You get that pullback and it goes down a little further, and I think at that point, you're so close to your target, you want to be trailing. And it bounces. Do you take this? Not in this bear move. You can't take that. We get a leg up. It stalls. We get another push up. It stalls more. Comes down. We find support down here. So, I think it's safe to consider getting long at this point, but if you enter long, the follow through is terrible. So you don't like seeing that. And then you get this overshoot, and then you get this bear bar. I mean, I think that is a very reasonable trade. However, you could be scared of like a crazy bull reversal, which we end up pretty much getting, but it doesn't even get to this level I'm seeing. But if you have this trend line drawn, though, I think you got to take that, because the overshoot of this bull channel, a nice strong signal bar, plenty of room back to the EMA. That's a good move. You got 8 points back to the EMA. That's uh that's about as low risk as you can get. You can see it gaps right over the trend line. You see that? No. So that'd probably be difficult to get in on a market stop order. But if you buy at the market, then you would have gotten in on that. So nice strong sell off after that, and it looked like the bears were trying to break through and overshoot this trend line, but they couldn't. This must have been, I don't know why this would be there. I had a like a triangle. Maybe it was like right here. I know I had it on the 17,000 tick chart. Uh, Something like that maybe. I thought it looks a little different than it did earlier. But anyway, so yeah, we kind of get this sort of wedge bottom. You can see one touch, two touch, three touch before we get a gap above the EMA, and then it comes back down, and you know prices are just finding support here at this level. So this is a good area to load up because the daily average bar is about 90 points. So if we already went beyond 90 points, all these bars have this overlap. Could this bar close on its low? Yes, it could. But, with an hour and a half left in the trading day, you might get in on a big reversal. And you did here. So I think it's reasonable to get long, you know, maybe here on limit orders. I like limit orders in this situation, personally. So let's see if let me limit order, limit order. Lots of overlap. I could see people being scared, and I understand that. That's because the bear trend was pretty strong today. But maybe you put your stop below the measured move, and that turns out to be a good trade. So that's how I saw it today. Broad bear channel. Another thing, look, there's a body gap here when we break out. So, that's another reason you might be scared to go long here. You have a body gap and prices are not above the EMA. So, I understand not wanting to get in on this, but if you know the context with the daily average being about 90 points and we've gone well beyond that. I think this was a 110 point day or 123 point day. So 30 points beyond that, I think it's pretty reasonable to consider this. Uh, so that's how I saw it. I'll be back tomorrow.